Welcome, dear traders. You are watching a recap of the Asian session. Yesterday, Wall Street rose amid a rally over tech stocks. Japanese and Australian stock indexes followed suit. However, macro stats of the Asia-Pacific region were rather controversial, which affected risk appetite. The main catalyst for a bearish sentiment was the economic woes in China. In the morning, a spokesman for the State Bureau of Statistics made quite optimistic comments. Fu Lingji said that there is no deflation in China and there will be no deflation in the future. The annual drop in consumer prices is a temporary factor. They are likely to gradually recover. The fall in youth unemployment has been stopped, and China's economy is expected to maintain stable expansion in the second half of the year. This is how the official optimistically outlined the prospects of his country. The future will show whether his remarks coincide with reality. At the moment, the situation with the yuan and economic indicators looks dismal. Today, markets received a bunch of disappointing reports from China. Industrial production, retail sales, investment, and new bank loans declined significantly. Industrial production eased compared to the previous months and amounted to 3.7% year-on-year, which was below expectations. There is also growing concern about the property sector. The Chinese market accounts for more than half of the global sales of new houses. Analysts are worried about the headwinds in this sector. On the top of that, the People's Bank of China unexpectedly lowered the base rate. The yuan jumped to a one-year high versus the US dollar. At the same time, the country's large state-owned banks were selling dollars on a Forex to buy yuan. This was reported today by Reuters with a reference to an anonymous source. It seems that China will have to adopt stimulus measures in the future. The US dollar rose higher as a safe haven currency. At the Asian session, it was rather volatile, moving in a very narrow intraday range of 103.00 and 103.20. It was trading at 101.30. versus its main rivals. Despite sliding into a red zone early Tuesday, the US currency was still hovering near its 5-week high. Its growth was also fueled by a climb in a 10-year Treasury notes, which grew by 2 basis points. In addition, the greenback advanced to meet hawkish expectations. As many traders have already priced in a rate hike at the September meeting, some speculators are expecting a rate increase in November. As the FedWatch Tool shows, more than 40% of traders have factored in such a scenario. Forex could become volatile today after the publication of US retail sales data. In the morning, Japan released some economic reports too. Compared to China's downbeat data, they looked more positive. For example, GDP significantly exceeded 2.9% and totaled 6%. Japanese industrial production grew at the fastest pace since the fourth quarter of 2020. It increased mainly amid the output of cars, electronics, as well as general-purpose vehicles and businesses. However, markets ignored this data. The yen began to fall again, and the fact is that the main part of the increase was due to exports. Therefore, the Bank of Japan will hardly adjust the yield curve control policy. As a result, the dollar-yen pair tested a 9-month high of 145.60 in the Asian trade, and this forced the traders to look for any hints of intervention by the Japanese authorities. Last year, the Bank of Japan conducted an intervention when the pair reached 145. In any case, concerns about intervention this morning definitely restrained the pair's growth of 145 and 70. Perhaps there will soon be more comments from Japanese policymakers. After all, before the actual intervention on Forex, the authorities repeatedly said that they were closely watching the yen's movements. If the sharp price swings continue, policymakers could move from words to dips. Given the possible volatility of the US dollar in the US session, we advise you to take this fact into account. At the end of the Asian session, the pair declined slightly inside the range of 145.30 and 145.90, but remained still in the green zone. Perhaps the Bank of Japan has started to buy back government bonds in order to somewhat lower the yen. Such a sharp decline may also indicate intervention on Forex. The Australian dollar also resumed the downward movement in the morning. However, at the start of Asian trading, it rebounded from its lowest level since November 2022. At the same time, it failed to recover following the growth of the yuan to 0.65, yet it managed to approach a high of 0.6517. However, after that, the bullish momentum began to fade. The Aussie fell to 0.6470 due to the ambiguous Reserve Bank of Australia minutes for the August meeting. Economic turbulence in China, which is the main trading partner of Australia, was a downside factor. The deterioration of the Chinese market and its currency adversely affects the Aussie as its liquid proxy. The Australian dollar also dipped on the decline in exports of commodities and falling oil prices due to weak demand in China, before the AUD USD pair slid into the downward range of 0.6462 and 0.6522. Its further trajectory will depend on the US retail sales data. The New Zealand dollar dropped moderately in the morning. Before falling to 0.5964, the Kiwi climbed to a high of 0.5995. However, it was not able to consolidate this high because of grim reports from China and the weak domestic economy, and the Kiwi dollar pair ended the Asian session in the channel of 0.5954 and 0.5998. It was trading near its 9-month low of 0.5971. The meeting of the Reserve Bank of New Zealand is scheduled for tomorrow. There is some hope that the regulator could raise the interest rate. Inflation in the country is still far from the 3% target. These expectations do not help the Kiwi to regain ground. As a reminder, the US will unveil the retail sales report today. On Thursday, the Fed meeting minutes for July will be revealed. These are the main market drivers. And that's all for now. Hit the subscribe button and stay up to date with the latest market developments with us. See you soon.